Coming up, Australia's 3G network prepares to shut down. We compare global home ownership rates and gold at a record. That's all next. Hi everyone, it is Monday the 21st of October 2024. This is your daily 10-minute business and finance news wrap. The Australian share market rose today by 0.7%. We'll have the details with Elise McKay from Pendal Group. But first, to telco news. And Australia's 3G network is shutting down next Monday, the 28th of October. Both Telstra and Optus will close that network, and it follows Vodafone and TPG doing the same thing earlier this year. You can find out it affects you by texting the number 3 to the number 3498. And believe it or not, there are still many devices still accessing that 3G network. For more, I spoke with Stephen Fenech, the editor of Tech Guide. Stephen, first of all, why are the 3G networks closing?
Well, all the networks have a certain limited amount of spectrum. Pretend this is like a block of land, and 3G, 4G, and 5G take up space on that block of land. That's what they call their spectrum. So the reason why they're getting rid of 3G is to make more room for 4G and 5G. That's as simple as I can explain it.
Okay, so how many 3G devices are there out there at the moment? And when we talk devices, we don't just mean phones, do we?
No, we don't. Now, there's still potentially tens of thousands of 3G devices, which range from anywhere from medical devices, back to base alarm systems, elevator telephones. So plenty of product out there, as well as some older smartphones as well. So yeah, it has quite a reach, this 3G shutdown, and which is why we really need to pay attention to make sure that once that 3G network is gone, that we can still use those devices.
Yeah, can we run through some of the potential implications for things like 000 emergency phone calls, perhaps those medical devices that you mentioned it, and the implication for businesses?
Yeah, I think we've had plenty of time to get our act together before the closure. I think Telstra even put back the 3G closure by a few months from their original plan. So just to give people more time to not only make sure their smartphone's working, in the case of the smartphone, yes, there are some 4G devices that will work for phone calls, but they won't be able to make 000 calls. The feature required here is called Voice over LTE, VoLTE for short. Now, this is how our 000 calls are going to be conducted once 3G shuts down, because the old 3G system isn't there anymore. So there are a lot of customers with older smartphones that might say 4G for the network, but don't have that VoLTE feature that will allow them to make emergency calls. And you don't want to find that out at the worst possible time. Best to check your devices right now.
So is it predominantly regional areas affected by this, or are city folk affected too?
Yeah, the effect will be widespread, mainly regional areas. So where there was formerly 3G coverage, will now have 4G and 5G coverage. So yes, it is going to make the network better. So the networks are going to get faster. That space that was formerly taken up by 3G is now able to be given over to 4G and 5G services, both voice, data. So it's in the benefits of the customer that this happens, so that things happen more smoothly, and also data can be transferred faster on the network.
And with people with these sorts of devices, what should they do?
Well, if you do own a smartphone that potentially may not have the VoLTE feature, you can text the number 3 to 3498, and the response you get will tell you whether that device needs to be looked at, updated, or whether you don't need to do anything at all.
Yeah, and if you do need to change your device settings, especially with that particular feature, the telcos have been actively notifying customers. But to double check, you can, of course, directly call your telco. Both Telstra and Optus have in-language information too on their websites. Now to Australia's housing affordability issue, and at 63%, it's actually one of the lowest in the OECD, 63% being the level of home ownership in Australia, whether that's people paying off a mortgage or owning in full. For more details about how we can fix it, I spoke with Mousina, AMP Deputy Chief Economist.
Well, it's interesting that Victoria's doing this change now because they've been increasing taxes in other ways for things like vacant property taxes, also for some land taxes. And this increase in taxes that they've had in the past 6 to 12 months has actually been leading to a fall in property prices in Victoria, as well as I think other issues like they have had oversupply of homes in the state relative to some of the other states. But I think some of these new changes to stamp duty are sort of trying to counterbalance some of these negatives that the Victorian government has been putting in place over recent months. I don't really think it's going to do much in the short term to counter the fact that prices are still likely to fall in Victoria, because there are probably more negatives around things like oversupply and some of the other taxes that have been put in place to counter this new change to stamp duty. It's also only going to be done for the next year. So I think its impacts are going to be limited. But in saying that, though, prices in Victoria and in Melbourne are now falling for houses and for units. So Melbourne does look like a much more affordable option now when you just do the metrics around house price to income ratios. It's looking much more affordable than Sydney, Melbourne, Brisbane, or even Adelaide right now in Australia.
That is Diana Mousina from AMP talking about Victoria's changes to stamp duty. We'll have more of that interview in a few moments, but let's go to the share market now, because the ASX 200 had a good day, up by 0.7%, 8,344. For more, I spoke with Elise McKay from Pendal Group.
So it's a good day on the markets, and I think interestingly we've actually got small caps outperforming large caps, which we've had a history of them not performing lately, so that's quite positive to see. But really what's performing is the resources sector. Iron ore prices up, all the bulks are doing well, Rio, BHP, Fortescue. We've got gold-related names ripping on higher gold prices, base metals, so the likes of Evolution, Sandfire and Capstone are doing really well. Lithium's doing really well. And that's really what's underwriting the markets today. I mean, consumer discretionary is a little bit more mixed. So we've got AGM season at the moment. And so you're seeing some names there which are impacted. So companies on the travel side like Webjet and Flight Centre, which downgraded through the course of last week, are seeing a little bit of a bounce. Whilst on the other side, you have Nick Scali, which gave a softer trading update today on increased cost of freight, and they're impacted today on the negative.
We focus on some of the broader economic/macro issues, right? China, first of all, cutting some interest rates again today. What does that say about the country? Because it's coming at a time where there's been a lot of economic stimulus pushed through to help it achieve its 5% target growth for the year, which it missed last week.
Yes. And so, I mean, this has been something we've been talking about for the past month, with China announcing measures which are really addressing monetary and fiscal stimulus, looking to address and restore confidence in their property market, and also restore confidence in the stock market. And really what they're trying to achieve here is confidence for the consumer, and looking to get that consumer back out and spending. They've got a demographic issue with lower birth rates. So if they can look to stimulate the birth rate, get more youths back into the workforce. So the youth unemployment rate, I think the last time I saw it was in the high teens. And so that's really important to continue to maintain growth.
You mentioned some of the gold players doing well today. Gold well and truly above $2,700 at record levels. What's your take? Because this also comes ahead of the US presidential election and the ongoing tension in the Middle East.
Yeah, gold is really interesting. And so if you think about how gold has historically traded, as interest rates go up, gold has been weaker historically. But since 2022, that has not been the case. Despite interest rates going up, gold is up, an order of 50% plus. And so really what's driving that? That's the big question. And what we've seen is a change. We've got a new structural buyer who's emerged in the gold market, and that's really influencing and pushing up the gold price. And who is this buyer, it's central banks, and specifically emerging markets central banks. And so they've come in, they're buying circa 3 times more than what they did pre the Russia and Ukraine conflict. And they're looking to really build up those reserves, diversify exposure, and also reduce reliance on the US currency. And so we still think that there's potentially more to go. If you look at that level of reserves, emerging markets still have about half the level of reserves that developed markets have. So if they keep closing that gap, that will continue to be a structural buyer. And you've also had structural buying from other retail investors. So say, for example, in China, where there's a loss of historically or recently been a loss of confidence in their property market, the retail investor is looking to instead store wealth in gold.
And finally, where do you see the opportunities for investors?
Yeah, so one stock that I've been spending a bit of time on lately is Downer. So this had a good result back in August. And it's a turnaround story which is finally bearing fruit. So a key attribute of a good turnaround story, in our view, is that there's actually a quality business that's there to be turned around. And Downer is the potential to be that quality business. They provide essential services for many of us that you probably don't even realise. They maintain about 10% of our roads. 14 million of us, they maintain our water supplies. 50% of our electricity market is maintained. Those customers are maintained by Downer. And so they maintain over 2,000 of our rail locomotives. So it's very much a essential business, $12 billion of revenue. But after a series of missteps over a decade plus, so poor management, growth for growth's sake, expanding through M&A into more complicated businesses, balance sheet issues, accounting issues, you name it, they experienced an issue. That revenue, the margin on that $12 billion of revenue fell from to 2.6%. You compare that with peers in order of 6%. That was a very material decline in the quality of their earnings. But you've got a new management team. The balance sheet's in really good shape. They've simplified the business. And most importantly, I think they've put money where their mouth is. They don't get paid unless they deliver on turning around this business. And finally, that's starting to bear fruit. Earnings growth is coming through. They have the potential to more than double, if not triple, their earnings base over the medium term from those lows in 2023. And it's trading still at 14 times PE versus peers at 17 times. So you get earnings growth at a reasonable price. That's a really interesting opportunity out there today.
It's Elise McKay there from Pendal Group. Now back to our earlier story, because we had a bit of a live play-out issue with that interview with Mousina from AMP on housing affordability, where we only played part of it. So here is that interview with Mousina from AMP in full. But Diana, at 63%, Australia has one of the lowest rates of home ownership in the OECD world. I thought it was the great Australian dream to own property. What's happened and how does it compare?
If we compare Australia's home ownership to some of our OECD peers, it is at the lower end of the spectrum. America is a tad higher than us at about 69%. The countries that have the largest home ownership rates actually tend to be some of those ex-Soviet countries, which have rates close to 90% home ownership. Australia's home ownership rate has fallen from over 70% in the early 90s, which is when we had the data, and I assume it was probably even higher beforehand. And it's telling us that housing affordability is a constraint for households to purchase a home, whether it's to actually to live in, so to be an outright owner, or whether it is just to have a mortgage. Obviously, the housing affordability challenge is sort of the main drag on our lower home ownership rates.
And so when we talk about affordability, we've spoken about the home ownership rates, but what about debt? How in debt are Australians?
Well, we know that Australians have historically had very high levels of debt relative to income. The best way to measure it and the broadest way to measure household debt is to look at household debt relative to income. So to look at how much you can potentially pay back. And Australian household debt to income is about 214%. That's a lot higher than some of our peers as well. The US is about 114%. Canada and New Zealand also have high rates of household debt to income similar to Australia. And the main reason for that is, again, because housing is so expensive in countries like Australia, New Zealand, and Canada. But you also have to take a bit of the counter side to that. So household wealth levels relative to income are also very high in Australia. So high household wealth is sort of a bit of a counter to debt, but you sort of worry about debt and you look at metrics of household debt because it can give you an idea of how vulnerable households can be when things go bad, like when the economy slows down or when interest rates go up, which is why people worry about household debt.
I know it's a very broad question and not something you can solve quite easily, but then how can housing affordability be improved?
I think housing affordability can definitely be improved, but it's really hard to say we can fix it from here. The issue for Australia is really to stop housing affordability from getting worse. And the key to do that is to stop home prices continuing to run well above incomes, because that will continue to push the household debt to income ratio high. It will continue to push the house price to income ratio higher as well, which is people getting access into the market. The biggest solution, I think, in the short term is really to build more homes. So we need to be building about 240, 250,000 new homes a year, whether that's houses, whether that's units, townhouses. We just need more homes, and to then match the level of supply that's coming in through net migration targets. So we really need to better align the net migration targets to housing supply, which we're not really doing right now. So basically in the short term, build more and limit net overseas migration, at least for the next 5 years, until we can sort of solve some of these undersupply challenges that we've had in Australia really for the past 15 to 20 years. And I think also a broader tax review is really needed to sort of look at all the different taxes that we have in housing: negative gearing, the capital gains tax concession, some of the stamp duty, and whether it's better to go to some things like land tax, to do a broad scale tax review to really see if we are pushing housing to be more of an investment rather than sort of a fundamental human need. That's really the question that probably needs to be solved.
Can we speak about one of the policies, I guess, that was brought up today, the Victorian government reducing stamp duty for units, apartments and townhouses bought off the plan for anyone. Before it was just for first home buyers, for example, and this plan is just for 1 year. So it's a 1 year plan, a 1 year tax concession, right, on stamp duties. To what extent do you think this solves supply and affordability problems?
Well, it's interesting that Victoria is doing this change now, because they've been increasing taxes in other ways for things like vacant property taxes, also for some land taxes. And this increase in taxes that they've had in the past 6 to 12 months has actually been leading to a fall in property prices in Victoria, as well as I think other issues like they have had oversupply of homes in the state relative to some of the other states. But I think some of these new changes to stamp duty are sort of trying to counterbalance some of these negatives that the Victorian government has been putting in place over recent months. I don't really think it's going to do much in the short term to counter the fact that prices are still likely to fall in Victoria, because there are probably more negatives around things like oversupply and some of the other taxes that have been put in place to counter this new change to stamp duty. It's also only going to be done for the next year. So I think its impacts are going to be limited. But in saying that, though, prices in Victoria and in Melbourne are now falling for houses and for units. So Melbourne does look like a much more affordable option now when you just do the metrics around house price to income ratios. It's looking much more affordable than Sydney, Melbourne, Brisbane, or even Adelaide right now in Australia.
Mousina there from AMP.
This SBS On the Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.